Well, hello, it's good to be back with you. I'm Bohnsack, President and Head of Portfolio Strategy for Strategas, Baird's investment strategy arm. This week marks, for a good many folks, the one-year anniversary of COVID upending our very way of life. For too many, the tragedies of COVID have been acute: the death of a loved one, the loss of a job, perhaps the unseen effects of isolation. For others, the pandemic affirmed the null hypothesis: kids are better off in school than learning remotely. While in some cases, it shed light on an alternative reality. Perhaps we don't need to be anchored to our desks to be as productive after all. Whatever your set of circumstances, what we may all be able to agree on is that a new set of social behaviors has been cast, and with it, important considerations that will frame not just how we interact with others, but how the pieces of the economy fit together, and importantly, how investors should think about all of it. Many elements of the economic cycle will remain the same. The emergence of a growth catalyst, in this case the reopening of the economy, should lead, in succession, as we've discussed before, to an increase in activity, demand, output, revenue, investment, and profitability. Other elements will be different. Earlier this week, the President signed a new $2 trillion stimulus package that, among other provisions, will provide checks to every American earning less than $80,000 per year. Not bad, and you could argue it's needed, but consider 85% of the United States population earns less than $80,000 per year. The unemployment rate is high, but it's closer to 10% than 85%. Do all those folks need the money? What will they do with it? We're not making a normative judgment on policy, as much as I'm suggesting that the money won't fall into an empty hole. We believe activity will see a notable boost this year, and with it our other cyclical building blocks, including profitability, are likely to jump as well. We recently raised our outlook for corporate profits. Our estimates are now well above Wall Street's best guess. Why? It's likely, in our view, as the economy reopens and the recovery gains momentum, that business will evidence a strong rebound in revenue on the back of fiscal stimulus, corporate investment, and the unleashing of a pent-up, and I would argue flush, consumer, which in turn will likely manifest in an above-average expansion of operating leverage. Consider this chart of the percentage of unprofitable companies in three major market indices. Nearly 50% of the companies in the small-cap Russell 2000 lost money over the last 12 months. Not good. But note the rather precipitous decline in each line as the economy leaves recession and the number of unprofitable companies falls dramatically. Said another way, the economy gets more profitable when it reopens. And that's a good thing. Now, it's always important to consult with your Baird financial advisor for the impact on your plan. Events over the last several weeks have made our team more bullish, not less, on the prospects for the economy and the markets in 2021. Now, it won't last forever, but we likely have some daylight for now. We'd keep an eye on earnings, inflation, and interest rates so we know just how much room we have to run. And with spring just around the corner, it might not be a bad idea to get outside and have a run. Know the Baird team will have your back while you take in the fresh air. Stay well. We'll see you again soon.